I know how it is to feel completely clueless in the realm of investing. Even now, there are often times where I feel clueless, even though I've been into this whole thing for years. Honestly, it wasn't up until fairly recently when I started really learning how to look at companies, and I still have a lot to learn. But I know it can be daunting, but I just wanted to make a fairly quick guide to help beginners, or I guess anybody, mostly beginners, I would assume, onto their path. This isn't meant to be a fully in depth guide, but I think it can be a great start for people. And at the very least, it gets you from shooting in the dark to at least having somewhat of an idea of what you're doing. And that is vastly more important than you know. So to start, let me just say, I'm sure you could tell by the title, but this video is about dividend paying companies specifically. And I like to categorize dividends into two different categories. There is slow and no growth, or there's also the low starting yield, but maybe very high growth companies. So it all depends on what stage of life you're at. If you're a lot closer to retirement, you might want a company that pays 4, 5, 6. Some companies will pay like 8% yield, which is pretty high. A lot of people might like that because they don't have time to sit and wait uh, just for all their dividends to compound over like 20 years. They might only have like 5 to 7. So first of all, it's pretty good to figure out what situation you're in. I personally am pretty young, and I like to go for some of the highest growing dividends that I possibly can, just because I have a really long time horizon. But this is basically going to be two different types of analysis. We're going to be doing some minor fundamental analysis and some dividend analysis. And if you're new and you're feeling kind of scared, don't worry, I got you. I set this up in an effort to be fairly simple, not only just to help you understand, but also because you don't need to make it complicated. But let's start with fundamental analysis. The very first thing that I want to look at is net income. Is the company making money? So you can pretty much do all of this on Seeking Alpha. Seeking Alpha is completely free. It is a website. It'll be your best friend, to be honest. You can do so much with Seeking Alpha. I really love it. But let me switch over to Seeking Alpha actually so I can show you what I'm talking about. So when it comes to this fundamental analysis, there's really only three metrics we're going to look at. And like I said earlier, we're going to start with net income. Is the company making money? So to see net income, we can scroll over right here to the financial section. It might take a second to load. Go to income statement and then literally just scroll down to the net income section. Boom, right here. So we see this net income tab, and it shows us the past 5 years as well as the trailing 12 months. And basically, what we want to see here, I wouldn't worry about the specific numbers, but are the numbers going up every year? Are they making more and more money every year? So, as you can see, I mean, that's pretty much been the case throughout the past 5 years. And, oh, sorry. And you can click on this little chart right here, and it'll give you a visual representation. So, all you got to think of is this line going up and to the left? And that's what's happening in the case of Microsoft with their net income. That's good. That's what we want to see. So is the company making money? So far, yes. Now what else do we want to look at? Now we want to look at their margins. Is the company keeping their money or profiting? So to see that, we can go to the profitability section. And I'm sorry, my computer's so low. We want to look at their gross profit margin. So Microsoft has a 69% profit margin, which is actually pretty good. As you can see in their sector, the average is about 50%, so they're well above the average. It gives them a grade of B plus, which again is pretty solid. Really, anything in the realm of like 50 to 70% is pretty solid. Anything above that is really high, which is really good. But also, not only are their margins good, but do they have stable margins? Are their margins growing or are they declining? Because you don't want to see the margins declining. So to get a visual representation of this, you can go over to charting. You can click on, let's just exit out of all of this. Sorry about that. But now we can see their gross profit margins. And over the past year, It looks like it's been declining a bit, but if we look at the past 5 years, you can see it fluctuates, but over the past 5 years, it's pretty much been going up. So it was 67.78% in 2020, and now it's 69.7%. It's it's fairly slow, but their margins are growing regardless, so they're becoming a more efficient company over time, which is good. The last thing that I like to look at is their free cash flow per share. So free cash flow per share is probably the best metric to look at in terms of dividend growth companies, and it's one of my favorite metrics to look at because if they're not growing their free cash flow, it's going to be hard as hell for them to grow their dividends. And I made a short about this, but free cash flow is basically all the money they have left over after paying, necessary bills and things like that. But we can find free cash flow by going into the financials tab again and then the cash flow section and then scrolling all the way down to free cash flow per share. And very similar to net income, you don't really have to worry about numbers too much specifically. You just want to see if it's going up. And as you can see, it's pretty much been going straight up pretty consistently. Trailing 12 months is a little lower than what it was in June 2024, but prices fluctuate. Nothing's ever perfect. As you can see, 2023 it dropped a little bit, but overall, if I can click on it, oh my goodness, overall, like the net income, it started down here, it's been going up. That's what we want to see. So it's very minor fundamental analysis, but it gets the job done. Okay, so now you've figured out your goals in terms of dividend investing, and you have an entry level idea and knowledge of fundamental analysis. So, what is the next step in this equation? Like I said earlier, the next step is doing some simple dividend analysis. Wow, who would have thought as a dividend investor you'd have to look at a company's dividends? So, moving back to Seeking Alpha, looking at Microsoft, now we want to do some dividend analysis. And it's super simple again. To start, obviously, we just have to click on the dividend section. Now, again, I have a super long time horizon. I'm not going to be worried about this for like 20, 30, 40 years. But some people may be closer to retirement, so dividend yield might actually be something to look at and be concerned with. You can see that right here in the dividend yield section. You have the trailing 12 months and the forward. But again, I'm not really worried about it too much. The next thing that I like to look at is their dividend history. Basically, have they been consistently paying and growing dividends? And in the case of Microsoft, they've been growing dividends literally as long as I've been alive, which is good. That's what we like to see. Next, we want to know, can they afford this? Can they afford this growth? Can they afford this payment? So we want to look at the dividend safety. And right here, these two metrics, I like to look at both of these, the cash flow payout ratios, because they're paying dividends out of their cash flow, right? And if it's way too high, they're not going to be able to afford it, or at least not be able to afford it for much longer. And right now, Microsoft has a cash flow payout ratio of 18% between 18.5 and 18.8. That is really, really, really low. That is amazing. That is so sustainable. If it was, honestly, in my opinion, anything like maybe 60% and below is solid. Anything like 30 to 40% and below is really, really good. Once you're starting to get up in like 70, 80, 90%, that I would be very cautious of that. Sometimes in certain assets, you may not have to be as worried. Like REITs may have a higher payout ratio, but for regular old stocks, that's just my that's how I like to think about it. That's my opinions on it. But again, this is a super low payout ratio, which means it's super affordable. They can pay their dividend multiple times. They can pay their dividend 5 times over and still have cash remaining, which is good. That's really, really good. Next, this is potentially the most important. How fast are they growing their dividends? Because if they're growing it too slow, like some companies grow slower than the rate of inflation, and I do not want that at all. So right here, we have their dividend growth rates over the past 3, 5, and 10 years. CAGR stands for compounded annualized growth rate. Literally just means the average per year over the past 10 years over the past 5 years and over the past 3 years. And Microsoft has been super consistent. All of these, it's been averaging about 10% dividend growth per year. So over the past 10 years, you've seen an average of 10.35% growth every single year. And they've kept that up. They're not losing steam at all. So that's good. That heavily outpaces inflation. Let me move on because I feel like at this point I'm kind of repeating myself. But if you wanted to see some estimates, you can click on the estimates tab over here. But honestly, that's really all you need to know in terms of dividends. Can they afford their dividends? How long have they been paying dividends? And how fast are they growing their dividends?
So, even with just a very basic knowledge of a company's fundamentals and dividends, you are armed with a much stronger sense of the company's direction.
My brother wanted to be in a video again, but he's absolutely right. Even though it's not the most in-depth research ever, especially if you're starting out pretty much from nothing, it is a very good start, and it's a lot better than not having any plan at all. And that's not even taking into account the fact that oftentimes dividend growers tend to outperform, but that's a topic for another video. So let's just summarize this real quick. You found your goals, and then once you figure out your goals, there's really only two things that you need to do: some fundamental analysis and some dividend analysis. So with fundamentals, are they making money consistently? Or are they not only making money, but are they profiting with their money? And how much free cash flow do they have that they can use towards dividends, amongst other things? And then moving over to dividend analysis, have they been consistently paying and growing dividends for several years? Can they easily afford to pay their dividends? And how quickly are they growing their dividends? Both of these are really all you need. You throw on some type of valuation metric that you can use to buy at, it doesn't even have to be undervalued, just fair valuations so you're not overpaying all the time, and you got a pretty good strategy. Or you could just put money in consistently, like every week or every 2 weeks, and that'll work as well. Little dollar cost averaging. But anyways, I wanted to make this video for anyone who may be new to dividend investing, or maybe even just investing in general. I'd like to think it's a pretty good start, and I hope you got something out of this video. Mark's Games, actually, if anybody's familiar with him, I just watched one of his most recent videos, and he was talking about wanting to get into dividend investing. Super hyped on that. I love dividend investing, and I love when other people want to get into dividend investing. So I'll probably advertise myself in his comments. But if you see this, Marks, I hope you got something out of it. Good luck on your journey, along with everyone else. Obviously, I hope you got something out of this. If you did, consider commenting, consider subscribing. I'd really appreciate it. Other than that, good luck on your investing journey.